All right, good morning, you degens hungry for the next wave. It's January 9th, 2026, and the market is, well, it's gasping for air like an addict who just ran a marathon through a legal minefield. So if you're looking for some glossy, polished Wall Street report, get out of here. This is the wrong place for you. We're only dealing with the raw truth and the smell of burnt money. We're talking about the brutal tug-of-war between institutional order and the pure, beautiful chaos that is crypto.
And this is it. This is the whole conflict right here on one screen. You've got the suits on one side, rolling out the red carpet with their ETFs, their regulations, their order. And on the other side, you've got the Wild West of DeFi, where entire projects just vanish overnight. This isn't just a divided market. It's a market at war with itself, being ripped into two completely opposite directions.
So let's start with the forces of order. And look, don't get it twisted. The institutional era isn't coming. It's already here. Wall Street isn't just knocking on the door anymore. They've kicked it clean off the hinges, and they're inside, building their own furniture right in crypto's living room.
I mean, just look at this. This is not just another headline. This is a seismic event. South Korea confirming a Spot Bitcoin ETF. We're talking about a tidal wave of capital that's about to be unleashed from one of the most crypto-obsessed nations on the entire planet. A massive, massive new pipeline of demand is being turned on.
And it's not just over there, it's right here on Wall Street. Giants like Morgan Stanley are making their move. They're not just buying some crypto on the side, they're packaging it up into nice, neat, regulated products, ETFs, for their massive client base. This opens the door to a whole new class of investor who wouldn't dare touch a decentralized exchange.
And here's the really crucial point. This goes so much deeper than just trading. We're seeing crypto get built into the very foundations of traditional finance. You have Solana being used by Visa for payments. BNY Mellon, one of the oldest banks in America, creating reserve funds for stablecoins. The UK creating official licensing. This is the new plumbing for the entire financial system being installed right before our eyes. This is what order looks like. But for every single step towards that clean, sanitized order, chaos strikes back, and it strikes back hard. You know that old crypto mantra, code is law? Well, it's a great slogan right up until that code breaks and everybody's money just disappears into thin air.
And case in point, the Truebit protocol. Wow, a face-slapping $26 million hack just wiped out 100% of its value. Gone. An entire project, an entire community, vaporized. This is just a brutal reminder that in this world, you are one single line of bad code away from total ruin. And this is the exact risk that keeps institutional money up at night.
And the chaos isn't always some hacker in a dark room. Sometimes, the call is coming from inside the house. Just look at the mess over at Zcash. The entire core team just walks out. A nasty boardroom fight breaks out over who owns what. And of course, the price completely tanks. It just goes to show you, human drama can be just as destructive as any cyber attack.
So what happens when this unstoppable force of Wall Street order smashes into the immovable object of crypto chaos? Well, you get what we have right now, a market that is completely and utterly paralyzed. Let's take a look at the data. This is the fever chart of a market that has no idea which way to turn.
First off, the king itself, Bitcoin, is completely stuck in the mud. It has been fighting and failing to decisively break past that huge psychological barrier of $90,000. All the good news from the institutions can't seem to push it through the fear that's being generated by all the hacks and the implosions. The market is just waiting.
And if you want to put a number on that feeling, here it is. The Crypto Fear and Greed Index is sitting at a paltry 28. That is squarely in fear territory. So despite all the talk of institutional adoption, the real sentiment on the street among the traders, it's nervous. And honestly, for pretty good reason.
Now this is a number I am watching like a hawk. Bitcoin dominance is at a very, very high 58.4%. And all that means is that almost 60% of all the money in crypto is sitting in Bitcoin. When this number is high, it means capital is scared. It's hiding in the perceived safety of Bitcoin instead of flowing out into riskier altcoins. And as long as this number stays this high, the dream of a massive 2026 alt season, well, it's going to remain just a dream.
This table just perfectly captures the market's schizophrenia right now. It's totally irrational. On one hand, you have these weird niche sectors like move to earn just inexplicably pumping. GMT, FitFi, they're having a revival. And on the other hand, you have the absolute carnage of the true hacks sending it to zero and the Zcash collapse. Capital isn't just sitting still, it's fleeing from the disasters and flowing into these strange pockets of speculation.
So what on earth could break this stalemate? You need a major external shock. And guess what? We have a massive one looming just over the horizon, coming straight out of Washington, D.C. This is the wild card that could send this entire market flying in one direction or the other.
Now listen to this. This is a direct quote from CryptoSlate. Friday's Supreme Court ruling could trigger an instant tariff shock crash as Bitcoin wildly misprices impact. Think about that. The market is nervous, sure, but it might not be nearly nervous enough. It might be completely underestimating the explosion of volatility that's about to be unleashed.
So here it is. This is the minefield we have to walk through tomorrow, January 10th. First, at 9 a.m. Eastern, a massive $2.2 billion in Bitcoin options expire. That alone is enough to cause some serious fireworks. But then, shortly after, we get the Supreme Court's ruling on those tariffs. A win for the markets could be the rocket fuel Bitcoin desperately needs. But a loss, that could trigger that tariff shock and send us straight to the bottom of the lake. The next 24 hours are absolutely not for the faint of heart.
So all of this, the institutions, the chaos, the data, this looming verdict from Washington, it brings us to a really critical moment, a true inflection point. This isn't just another day of trading. This is a moment that forces a choice.
And I want to leave you with this quote, because it sums up the stakes perfectly. In this game, you're either the driver or you're the fuel for someone else to burn. Choose. With Wall Street giants moving in and the unpredictable Wild West of crypto still very much alive, you have to decide what role you're going to play.
And that's the ultimate question, isn't it? When these two colossal forces, the clean, regulated order of Wall Street and the raw, unpredictable chaos of crypto's frontier, when they finally smash into each other, who wins? The answer to that is going to define this next era of the market.